Hi everyone, in this video we're going to be looking at our homework problem 11.2, and in this problem it's going to be pretty similar to the one that we just looked at in the previous video for 11.1. And so I've created a relatively similar breakdown, and we're going to work through these journal entries and then look at the retained earnings statement and then look at the shareholders equity section. Okay, so again we're going to be looking in the second year, if you will, 20x2. Here's the information from the first year. And let's look at our journal entry we had. So a few more in this example. So on the 5th of February, the company issued 20,000 shares of common stock. So again, we've got cash, we've got common stock, and then we've got, I'm just going to go back. Oh, I don't have it anymore. Okay, I'll just write it out here. This one's always kind of a long, it has a long name. And so I always like trying to find a spot to kind of pull from if possible. Let me see if I've got. Sorry, bear with me for one moment here. I can't find an example, but we'll say paid in capital in excess of par common. Okay, and then that's going to be so when we look at this, our total amount that we're getting in cash then is going to be the 20,000 shares we issued times the market value of $32 per share, so 640,000 cash coming in. The common stock piece is just going to be the par value, so again that's the 0.50 cents per share times 20,000 shares, and then the difference, the excess there, as it's noted, is the that account, the paid in capital in excess of par, common stock, and we'll say issuance of 10,000 shares. How about that? Oh, well, that's the wrong amount of shares. 20,000 shares is right. There we go. Okay, on March 15th, we declared preferred dividends of $2 per share with a record date of 4/15, payment date of 5/15. So here we have our retained earnings and dividends payable. And this told us it was $2 per share. And so we're looking at preferred stock. So we had 20,000. So 40,000 is going to be the cash dividend there when we pay it. And we'll say dividends declared. I'm going to copy this journal entry because I already saw the next one is the payment of those dividends on the 15th. Oh, wait, no, yeah, there we go, 5/15 from March 15th. Okay. So then we make the payment, and we can kind of just link up to that. This will be dividends paid now, not just declared. Cash is going to be paid. 40,000 is the same. And yeah, that's our payment date there. And our dividends payable goes to 0, right? Because we credited the liability to increase it, and then we debited it to decrease it. Okay. Okay, on June 30, we declared common stock dividends of $2 per share. And it's got a little hint here that don't forget 20,000 shares were issued on the 5th. That was our first journal entry up here. And so we're going to do the same journal entry basically here. I'm just going to copy this. In this one, we're going to say dividends declared, but as the hint will guide us, we've got, let's see, how much was it? $2 per share. Okay, so that's the same $2. Oh, excuse me. But we need to see how many shares do we have outstanding or issued at the time. Or I should say outstanding at the time. So let's go back here and say common stock. We had 90,000 outstanding, and then we just issued an additional 20,000. So there should be 110,000, I believe. Let me see if I got that right. 220,000. Yep. So remember, that's the 90,000 of common stock shares outstanding to begin with, and then on the 5th we issued an additional 20,000. So that's where we get $2 per outstanding common stock shares. So if we want to show it just a little more, here I'll do it like this just in case this is helpful. 90,000 plus 20,000. 90,000 to start. Again, that's here, and then 20,000 additional shares issued there. Oh, it doesn't like my commas, but you get the point. I'll delete the commas out. Okay, so now when those are declared, they're going to be payable. We'll pay those. Okay, on 8/1, then we just paid them. So I'm just going to do this same journal entry again. Okay. Now on 10/15, I'm going to actually make a few more spots here. You should, again, I'll keep these in for you, so you shouldn't have to make more lines, but I'm going to need them. So on the 15th of October, we bought back some shares. So remember, when we're doing share buybacks, we're going to have treasury stock, and that's going to be how many? 10,000 common shares needed for the employee stock purchase plan. The par value is 50 cents per share. Market value is 24. So remember, we don't care about the par value for the treasury stock transactions. We just record them. This is stock repurchase. Let's get our format painter there. That looks funny. I think repurchase is one word. Yeah. Let me spell check that. It's just pulling up the. I have these as X's in here, so when you all go in to do your work, we'll work on those together in this video. But I wanted you to just understand where that was coming from and the updates we'll do there. Okay, so anyway, on to the last transaction on 12/31. We closed 400,000 of income into retained earnings. So then I'm just going to take this from here and paste it in, make it a little easier. And remember, income summary is the account that we use for the closing entries, and that was $400,000. Oh, not 4 million, 400,000. And we'll just say close income. Or I'll say net income. How about that? Okay, so now all of our journal entries are complete. So let's finish out our retained earnings statement. So our beginning balance of retained earnings is the same as the ending balance in the prior year. So we had 750,000. Then we add our net income in, which was the 400,000 that we identified there. I don't know why that was bolded. But then we've got dividends. And the total amount of dividends paid that we showed here was, I think we had 2 transactions, right? We had the 40,000 plus the 220,000. Oh, whoops, what did I do there? Okay, yeah, let's make them both negative so it comes out to a reduction. So again, that's this dividend paid and this dividend paid, right? We had 2 different dividends paid transactions there. Our ending balance then is 890,000. And now we'll come over and complete. So that part B is finished. Now C will say prepare the shareholders equity statement section here. So here's what it was before, right? We need to do some updates. So how many shares were issued? How many were outstanding? So let's take a look back through, and here we issued 20,000 shares of common stock. And so what I'm going to do, actually, this may be helpful. I'm going to say, let's do CS and preferred stock, PS. And let's go ahead and say beginning or how about this? We'll say 1-1-x2, and we're just going to say number of shares. And let's say number of shares. Let me do this for you. Number of shares issued. Let's have that as our first thing we're going to analyze. So we had 120,000. And that's just coming from here. Preferred stock had 20,000. And that was our beginning balance. Okay, and then what do we do? On 2,5x2, we issued 20,000 shares of common stock, so we had 20,000 more shares. So let me format those. Okay, so then we had 20,000 more shares. And then on 530, we issued 10,000 preferred stock shares. Okay. Okay, so I think that's everything for our number of shares issued then. And so if we sum those up, we get 140,000 of common and 30,000 of preferred stock. So 140 and sorry, I'm just checking my work here. So we had 20,000 issued, and we issued 10,000 additional. Yeah, so that looks right. So then we come down here and say, so total shares authorized won't change. So preferred stock has 50,000 shares authorized. Now we have 30,000 shares issued. And we bought back common shares, but we didn't buy back any preferred shares. So that should be basically just the same amount there. And okay. And then as far as the common stock goes, again, we have 140,000 issued now. And the amount outstanding is, because we did buy back, so we started with 90,000 outstanding, but then we bought back 10,000 shares. So that's going to be 100,000 total outstanding. Maybe I'll add a section there as well, just to, I figure that might be helpful. I'm just going to paste this in. So at the beginning of the year, the outstanding shares was 90,000 for common stock, 20,000 issued and outstanding. So that's the issued is the same amount as the outstanding for the preferred. The issued and outstanding are different for common stock and the preferred stock. And let's just get rid of that info. But then we bought back 10,000 shares of so our less. So we have more. Where are we at? 90,000 outstanding. Then we bought back. Bought back 10,000 shares needed. So now we have. Is that right? 104,000. Is it 10,000? I got to think about this. My answer key is telling me 100,000, but I think. Let's see. Okay, so the difference between, so our treasury stock to start was 120,000 minus 90,000 means we would have had 30,000 in treasury stock. And then if we have 120,000, oh no, wait. Oh, geez. All right, well, I'm just doing this as an illustration because we did actually issue more shares. We have 140,000 now. So I'm just trying to show if we originally had 30,000 of this is what's outstanding. This would be treasury stock. We just bought back an additional 40,000. So this needs to be 80. That would be 80,000 outstanding then. Or sorry, yeah, 80,000 outstanding because we bought back 10,000 shares. Oh, but we did issue 20,000. That's right. Okay, so we do need to combine those. So our gosh, this gets a little confusing. So I almost want to put this. We have 100,000. We started with 100,000 shares outstanding, but then we added, 20,000. And similarly down here, numbers of shares issued and outstanding. You add in the issuances. So again, similar thing with adding the adding the preferred stock, but then we subtract out our balance for the treasury stock transaction, and that happened on. What date did that happen on? $10.15. And I'll just say C above to see these two. Here's the issuances, and then that's the total number outstanding. So it gets a little confusing. That's why having a table is actually a good thing to see, because then you're tracking the amount of stock. And so 100,000 outstanding makes sense. 30,000 outstanding makes sense there, and what's issued, like those match, right? But this one will say 140 and then 100 outstanding though. So hopefully that's helpful. Again, it's a little tricky, but that's important to have your information correct if you're actually doing financial statements in the future. And okay, so then we're going to need to do our accounting and our balances here. So then we can go in and say we had our common stock was 90,000 to begin, I believe. Oh wait, no, wait, where am I at? 60,000 as a beginning balance here. And then we can come over to our common stock. Okay, we had an increase in the 10,000. And let's see. So 70,000 now in our common stock total. You can see the credit here to increase. And then the 60,000 is our beginning plus the issuance to get a total of 70,000. Our beginning balance in the paid-in capital and excess was 1,850,000 plus 630,000 here. Our paid-in capital, our preferred stock was 500,000 to start. And I think let's see here, we issued some more. Oh shoot, I think I missed that journal entry. Or is it? Okay, wait. 2/5/3/15, May 5th. Oh shoot, yeah, sorry, I missed that entry. So let me add a little more space here. You guys probably saw that while I was doing it, and we're like, hey, you're missing something, man. My bad. Okay, that was 5/30. And we issued 10,000 additional shares of preferred stock. So I'm going to take this as just a template. Oh, need more space here. And we're going to say we got in $28 per share times 10,000. So we got 280,000 total proceeds from our stock issuance. Now, that's not common stock this time. This is preferred stock, and we're paid in capital and excess. So again, will also be preferred. And this was an issuance of 10,000 preferred shares. And what's our par value here? Our par value, oh, it tells us about $25 par value, so 25 times 10,000 shares, so 250,000, and then the excess being, whoops, that's not right, that minus 30,000. So now we balance. Okay, so now back over to our amounts. So our beginning balance in preferred stock was 500,000. And then we added in with what we just did 250,000. So we should have 750,000 now. And then paid in capital beginning balance was zero. I guess we didn't have any to start with. And then this one bumped us up 30. Gave us 30,000. Okay, and the retained earnings we just bring over from our retained earnings statement. And now treasury stock, we initially had 420,000. 420,000. And then I'm going to add to that. I'm going to use a minus sign because it's, we're adding to a negative. And then we did our treasury stock for $240,000 more. So that gets us 660,000. Add those all together, and now your ending equity in total is 3,560,000. I'm going to leave these up here for you all to kind of mess around with and follow along there. Hopefully that's helpful. I think that is part of the trickiness in this chapter, is just kind of tracking in your mind the issued versus the outstanding. Remember, the issued is the total amount that had ever been issued, essentially, the gross amount before you're taking into account any treasury stock transactions. And it told us the total amount outstanding at the beginning of the year, and then you added to it with issuances and subtracted from it with treasury stock purchases. So, okay, well, that brings us to the end of the problem there. Thanks for following along. This one had a little bit of had kind of a lot of transactions. I know I'm almost concerned. Make sure I got it. 8. 1, 2, 3, 4, 5, 6, 7, 8. Yeah. Okay. Just missed that one journal entry when I was going through. So sorry about that. But that's what happens in Excel. It's nice and easy to add it in there, and you can add it in relatively easy in chronological order as opposed to doing it on paper. So you kind of see how you can add, columns in there just by highlighting those cells, and then you can just click insert. Oh, that didn't work. Click shift cells down. How did I do that? You could also, I think I just did it this way. If you highlight the whole row and then click insert, it just adds a whole new section. So different ways to handle the problem, or you could cut and paste down, so on and so forth. So that, Excel skills, good to have. All right, thanks everybody. I'll see you in the next video.